Warren Buffett, one of the greatest investors of all time, shares his insights on smart investments during high times of high inflation. In this video, you'll discover the smart investments, strategies, and techniques used by Buffett himself to protect and grow wealth in a challenging economic environment. With rising prices eroding the purchasing power of your money, it's crucial to have a game plan that can withstand these economic challenges. And who better to learn from than Warren Buffett? As a legendary investor who, with decades of experience, his wisdom and expertise will guide us through this complex topic. So let's get into it. Inflation can be defined as a persistent increase in the general price level of goods and services over time. As prices rise, the purchasing power of money decreases, affecting consumers' ability to buy the same quantity of goods and services they could in the past. This reduction in purchasing power has a wide-range impact on the economy. It leads to higher interest rates, reduced consumer spending, and can even disrupt businesses and investments. To illustrate the impact of inflation on everyday expenses, let's consider a relatable example. Imagine you regularly spend $50 on fuel for your car each week. However, due to inflation, the price of gasoline has surged, and now the same amount of fuel costs you $65 per week. This increase in transportation costs not only affects your personal budget, but also impacts businesses, leading to higher prices for goods and services. Inflation's effects are far-reaching, influencing every aspect of the economy and consumer behavior. Several factors contribute to the occurrence of inflation, and it's crucial to explore these causes to navigate inflationary periods effectively. One primary cause is an increase in the money supply. When central banks engage in expansionary monetary policies, such as printing more money or lowering interest rates, there is more money available in the economy. This excess money leads to increased demand for goods and services, driving prices higher. Another contributing factor is rising production costs. As the cost of labor, raw materials, and energy increase, businesses may pass on these higher expenses to consumers through higher prices. Moreover, global events can impact inflation rates. For example, geopolitical tensions or natural disasters can disrupt supply chains and lead to shortages, causing price increases for certain goods on a larger scale. Warren Buffett's investment philosophy. One of the key aspects of Buffett's approach is his steadfast commitment to long-term value investing. Unlike those who chase quick profits or succumb to market hype, Buffett patiently searches for undervalued assets, akin to finding hidden treasures amidst a sea of skeptics and pessimists. This unique approach has been a significant factor in this remarkable success, making him a role model for investors seeking stable and sustainable growth. One remarkable trait that sets Warren Buffett apart is his unwavering determination to remain steadfast amid market fluctuations. Daily market ups and downs do not sway his investment decisions. Instead, Buffett stays true to his principles and focuses on the long term. This resilience and nerve of steel enable him to ride out the unpredictable waves of the market with finesse, while others may panic and flee during turbulent times. Buffett stays grounded, much like a seasoned sailor navigating through stormy seas. Discipline is at the core of Warren Buffett's investment philosophy. He resists being swayed by whimsical market fluctuations or flashy trends. Instead, he maintains a key focus on the underlying value of investments and the long-term potential of businesses. Buffett's ability to see beyond the short-term market noise allows him to make calculated and informed decisions that have stood the test of time. As high inflation and economy challenges loom, Buffett's philosophy reminds us to keep our gaze fixed on the future. During a talk in 2022, Warren Buffett emphasized the importance of safeguarding ourselves from inflation by becoming exceptionally skilled in a particular area. He advised that being proficient at something valuable allows people to willingly exchange what they produce for the value delivered by others. In 2015, Warren Buffett identified a category of companies that might not fare well during periods of high inflation. He specifically referred to companies facing repeated high capital expenditure. One notable example he mentioned was utilities firms, which could become less favorable investments during inflationary times. These companies often require substantial ongoing capital investments to maintain and upgrade their infrastructure. In times of high inflation, investors must adopt prudent strategies to preserve and grow their wealth effectively. Warren Buffett offers valuable insights on making smart investment decisions during inflationary periods. One such strategy is to allocate a portion of the portfolio to tangible assets, which includes real estate, commodities, and precious metals. These assets tend to retain their value during inflation due to their intrinsic worth and limited supply. Real estate, in particular, serves as a robust hedge against inflation, as property values often rise with the overall price level. Commodities like oil, natural gas, and agricultural products, along with precious metals such as gold and silver, have historically proven to be reliable stores of value during times of monetary instability. Diversifying into tangible assets can provide investors with a shield against the erosive effects of high inflation. Another smart strategy during high inflation is to focus on companies with pricing power. Investing in businesses that can raise prices and protect profits during inflationary times can be akin to having, let's just say, superheroes battling the forces of inflation. Industries like utilities, consumer staples, and energy are known for their pricing power, as their products and services are considered necessities. Dividend-paying stocks are also valuable assets during high inflation. These stocks not only offer the potential for capital appreciation, but also provide a steady income stream. Companies with a history of consistent dividend payments can act as trusty sidekicks, providing stability and a buffer against the erosive effects of rising prices. Warren Buffett himself is known for his fondness for dividend-paying stocks, recognizing their ability to offer a clear and steady path to wealth accumulation. In addition, Buffett sees real estate as an excellent option for investors during inflationary periods. Real estate investments, particularly properties, serve as a valuable hedge against inflation due to their unique characteristics. Once a property is purchased, it does not necessitate frequent repurchasing, making it a stable and enduring asset. Even during times of weak property prices, real estate investments are not consuming capital like companies with high capital expenditure. Instead, they tend to generate long-term gains in value. Commercial real estate investment trusts could be particularly compelling investment opportunities during high inflation. While they may face some temporary challenges, REITs have the advantage of generating consistent rental income in the long run. Furthermore, bonds and inflation-protected securities play a crucial role in safeguarding investments during high inflation. While rising inflation erodes the purchasing power of fixed income assets, certain bonds and treasury inflation-protected securities, which for short are TIPs, are designed to mitigate this risk. TIPs, in particular, provide investors with protection against inflation as the principal value adjusts with changes in the consumer price index. This ensures that the investment maintains its real value and protects against the erosion caused by rising prices. Enjoying this video? Give it a thumbs up and share it with your loved ones. Don't forget to subscribe and hit that notification bell to stay updated with our latest content. Now let's jump right back in. Ensuring a diversified investment portfolio is a crucial strategy when navigating high inflation, and Warren Buffett himself is a strong advocate of this approach. Diversification involves spreading your investments across various asset classes, industries, and even different countries. As prices soar and financial uncertainty looms, having a diversified portfolio acts as a safety net, providing protection against the unpredictable fluctuations in the market. Warren Buffett once famously said, "Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing." The advantages of a balanced portfolio are even more evident during, well, let's just say the inflationary periods. By having a diverse mix of assets that respond differently to inflation, investors can preserve and enhance their wealth. For instance, real estate and precious metals have historically served as effective hedges against inflation. Simultaneously, well-established companies with strong fundamentals can offer protection against currency devaluation and generate steady returns in such challenging economic environments. Furthermore, a diversified investment portfolio fosters long-term stability and sustains growth. Over time, various assets experience different cycles of performance. By holding a diversified mix, you can achieve a smoother return trajectory and avoid the pitfalls of concentrating all resources into a single asset class. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.